So today is October 13th, 2025. Just want to get on here and do a first journal that I post for the public. That's obviously not the goal, is to get a following right now, at least. Maybe I'll speak that into existence for the future. But as of now, if someone comes across this, is mainly so I can just hold myself accountable. But really, I just want to track my plays, track my growth. I want to be able to look back in a year and just be able to find it all in one spot and just see where I've come from, you know what I mean? And be able to watch it along the way. So with that being said, we'll just get right into it. We're just talking fundamentals here, a little bit of emotion, a lot of psychology. So with that being said, today, this is just to show you what we ended up trading. We did 2 plays today. We spent about $120 on the play for the first one. Then we downsized, which is the rule. Regardless of how that first play goes, win, lose, draw, we're downsizing on the second play. So with that being said, taking some risk off the table. So close that down here. Now, market yesterday, if you go back and back test and look, we were setting higher highs, like I'm talking all month long. Yesterday, this is when Donald Trump tweeted that he was going to put 100% tariffs on China in retaliation to what they said. And the market, this was probably, it was $20 total that it went down. So crazy. We had just gotten out of a play, a short. It was a good day. We won that day. Good green day. We celebrated it. And then as we were doing a journal, we watched it drop. So as of now, the government in the U.S. has been shut down. So they're looking to, work on the budget, get some things passed. So they've been shut down at a standstill since October 1st. And now we're going on 13 days here. So we're just going to talk today real quick, get right to it. As you can see, this was the candle that closed. We bounced off this 4-hour trend line right here. And you can see where we, in my opinion, we just stalled out here. We had a bunch of orders here. We held, it's looking strong, but also this was a no news Monday. So the market, the economy, the government being shut down means they don't release the news typically. Powell's not speaking, all of those different things. So when it comes to market structure, in my opinion, we didn't really have much here. So how we typically trade is off of overnight high, overnight low, along with orb high, orb low. And that's what we're going to talk about mainly today, and that's what we stuck with. We stuck with those fundamentals. So as you can see here, though, on the daily, we have a higher high and a higher low. So those were going to be some big areas as well. And I think over the next week or so, we're going to want to track the liquidity a little bit more than the other. And we're just going to play and take trades as we see fit. So let's go back here. So I want to be able to look at that when we get to it. So that's how we opened the market. You can look on the 4-hour here. We saw this gap. This gap, though, today did not fill at all. Will this gap fill tomorrow? I'm leaning towards the answer of yes. I believe it's somewhere up to 85% of the gaps on the S&P 500 get filled. So that's what we're going to be looking for tomorrow. But that's not going to be the premise of our trades. It's not going to be the complete mindset of it. So we're going to come in tomorrow, fresh eyes, rested eyes, and we're looking forward. And we're going to see what is presenting from overnight and what it did today. So let's go back down now further to the 1 hour. Now, on the 1 hour is when I started to feel like I was seeing some structure. So you can see we had the gap up. We held here. We never broke below this. You can see we have a 30-minute higher low. That's what this yellow line is. As I get further down, we're going to zoom in more. But right now, market structure, I just want you to see it off of the actual candles. So right here, we just consolidated all day today. That's literally what we did. And we were working off of this lower high. So we came up, got over this lower high, and could not hold it. And then we couldn't get above this. So tomorrow, in my opinion, this lower high, which is around overnight high, is going to be our area of resistance. So if tomorrow and overnight we come back and fail through this area, or we fail it overnight and we come back and test it tomorrow, that's where I'll be looking to get a lot of the shorts at. So that's where I'm starting with my market structure tomorrow. Let's go back down further now. So we set our overnight high, we've set our overnight low, our previous day high, previous day low. I didn't mention those, but those are our key areas. So now we're gonna go back to the start of the day. Alrighty. So when the market opened, we saw where this right here is our 5, 10, 15. So this is our first 15-minute orb here, the first 15-minute candle. And as you can see, we ranged in it. Market open, we went up. The first and foremost rule is a 5-minute candle close at our area. And this first area we approached was the orb high. We, as you can see, closed below that. Let me zoom in a little bit more. So you can see we closed below that with this blue candle here. Market opened up, or candle opened up next and just ran up. That wasn't our play. We did a very good job of not feeling this pressure to jump in. If this candle would have closed above that, I would have had from the top of this orb box to the top of this candle of leaving stuff on the table to give me more information to tell me that I can take these plays. So with that being said,
returning to charging station.
So with that being said, this right here was not a play that we were going to take. Because we didn't take that play, we shut the contracts down. We just sit back, take our hands off the driver's seat, and we let the market go and do its thing. Now, once we saw it come up here and it come back down and we 5-minute candle close into orb here, we wanted to see a retest. 5-minute candle close in between here, and we didn't retest it. We pushed back down, once again being very patient. I mean, by this time you can see it's 10:30 already. So it's been an hour and a half, and we haven't even taken a play yet. So now, when this candle right here broke below and sat on the top of the midline of orb, is when I started to tell myself that what if scenarios is what I call it. If price pushes up to here, I'm going to count this as a fail. Even if we push above it, I'm going to be prepared for us to take sales back below. The reason why is because I started off the morning with looking for sales, thinking that the market was going to sell off. And so with that mindset is what I want to stick with. I don't want to just come into the market with blind. I'm just going to see what the market gives me. And the reason why is because if I don't look for that market structure on the higher time frames, which is the daily, 4-hour, and the 1 hour, if I don't confirm between those three, and I'll use the 30 minutes as like a last minute looking down at a more minute area, but I don't want to get too small because all of this can chop in between all of that. But if I don't look at the market structure, then I'm going to take any of these plays that just go in a direction and they don't always follow through. And those are the ones that I'm trying to minimize on. The ones that I'm just taking just because it hit my area. I wanted to hit my area, but to be trying to head in the direction that I predicted. And it's not about being right. It's about trying to have market sentiment. So with that being said, this candle came down. If it comes up here and it closes above this, then I was watching to maybe take some calls, but I was going to take and change my mind about calls up here, which this line here, this yellow line, is overnight high. So that's an area of our confluence. That's an area we can take a trade in. But price didn't do so. So once it got up here and I saw it starting to dump right here, I told myself I won't take that trade until we close back into here. We got a 5-minute candle close here, and you'll see when we break it down a little bit further, price went, once we closed here, went back up to test. That's when we got into our shorts, and we got a good smooth 40% here. We sold one at 20%, and then a second and third contract at 40%. After that, I'm gonna move this play up here. I'll break it down because it's somewhere up under here. So I'll move this, you can see it up here. We took a play up here thinking that it was gonna go up in this area, and we'll break that down on a 1 minute. And mainly because I want to journal about how I should not have taken that play, especially after doing such a great job today. We were up ideally between 40 and 20%, so we're up 30% for the day, and that could have set our week to where we stay profitable. So, not saying that I'm thinking we're going to fail. It's just you cannot predict the market. You don't know what it's going to do. So you have to take those plays and you have to maximize on them. And so the lesson from today is that I want to remind myself that I am still building this account. Now, when we have tens of thousands of hundreds of $1,000s in here, and we're at $150,000 for the year, and it's only not even halfway yet, or that's the first quarter, like first month. When we get to that point, then yes, that's a different story. However, right now we're building an account. So I think what I want to give up as a little minute change is I want to give up taking these second plays if the first play is a runner and I hit full TP. I want to capitalize on holding those, because then what it's going to do is on the days when I hit 2 reds, which keynote, the rule on that is if the first play is a loss at a full contract size, we downsize. And we're downsized by cutting it in half. And what it's going to do is if we hit 10% down again on that, we're out of that play, we lost just a little bit. And it's enough to where if we come back in the next day and we hit a 40% trade, then, and not even just the next day, within the next 4 plays, then we'll break even. If we come back in the next day, we're going to be profitable because we would have made that back and still be up some. And the second play allows us to, now we know a little bit of what the market's going to do. We can get a feel for her, and it's just going to make it to where we get a better opportunity to make all of that money, to make that money back and break us back, break even with a little bit of profit. So now psychologically coming in the next day, we're not in the hole. But if we take 2 reds in a row, at least it was on the smaller side. So that's the premise behind all of that. And the more trades that I upload, the more you'll see that, the more we're coming back and reviewing. So just keep that in mind. We're going to drop all those tidbits. But maybe I'll even do a video just for my reference of where I just talk strictly my rules and I just talk it all. That way I have it written down, and by written in video format, being a visual learner, I'll have it somewhere. So back to the plays here. I'm going to ready to go down to the 1 minute here. Let's go to 10:45. So I know it's around that time. So we saw on the 5 minute what we were doing. We saw where we closed over here, under here, on a 5 minute candle. And let's point to that 5 minute candle that's right here. So that 5 minute candle, 1, 2, 3, 4, 5. So from this candle to this candle, that was the 5 minute candle. We closed below. When this one closed, I wanted to see us come back up and test this area, which was the orb, the top of the orb. We did not, as you can see there. So we leave that play alone. Ideally, we were going to come down here and close below the bottom of orb. That did not happen. We pushed back up, and this is what I said of, if we push back up, I would love, to me, this is an A+ setup. I would love to see us push back up and climb, and if we drop back into that orb, that right there is where we were going to see a good drop down. Because if you think about it, the people between buyers and sellers are coming in right here. And if they're still in charge and we're pushing back up and buyers come right into here thinking this is about to be a takeoff, their stop loss is not going to be up here. They're going to get in and they're going to be in profit. But their stop loss is down here, ideally below this candle. And it's kind of a little hard to see, but you can kind of see it there, that green candle volume. Look how much volume came in there. If all of this volume of $93,000 comes up and then gets bought back out, that's liquidity now. That right there is a liquidity sweep. We've taken all of that and liquidated it. And now these people, when we drop and we come break below this candle, they're going to say, hey, I have to get out of this now. And they're going to be hitting the market order. And as they're hitting the market order, they're selling it. That's what's going to drive this play down. And that's what it is. That's what we're looking for. So to me, that right there is the bread and butter of our play. Now, when I see This, sometimes we get just a 5-minute candle close over here. As you can see here, that's what we got. We got a 5-minute candle close here, right back in the orb. Sometimes we get the 5-minute candle close here, and it's coming right into this area, and we don't see where we push back up and close a few candles above and then drop. And this right here is basically setting these buyers up. The sellers are allowing these buyers to come in because these sellers want to get more fills. They're just coming up here and they're just like, oh, we're back in this area. Let me get another 15. Let me get another 30. Let me get another 80 lots. And that's what they're trying to do. So when we see a 5-minute candle close, sometimes we don't get this liquidity sweep. And that one right there is probably a little bit more of a low probability. But when we see this right here, that 5-minute candle close, and then we push back up and it looks like we're going to run the opposite direction and then we fail, that's chef's kiss. So I don't take it on this one. I still wanted to see a 5-minute candle close, ideally. And I was going to let that 5-minute candle, even if it's down here, I still want to see it come back and test this area. And then as it pushes past that, if it would have came down to here, this yellow line, let's just say, and then we didn't push all the way back up and then we pushed, I probably would have been a little bit more apt to taking it. But this right here is just communicating to me, hey, we're trying to take this area right here. We're trying to get above it and we can't. So now the sellers should step in here. And so you can see at the start of this candle, I'm going to delete the orb here so we can see. So you can see at the side of this start of this candle, this is where we got in at on this green candle. The reason why is because we set a limit order. It pushed up and it grabbed us. And that was perfect because we saw all of this and we could have marketed in. That's usually how we get into a play. But a limit is just nice because you can see where it's trying to teeter. And if you set it 1 point above and it taps that and pulls back, now you're at the top. And the reason why being at the top is nice is because you're going to see minimal drawdown and you can kind of hold to know, because like this right here, if you're at the bottom of this one, this is probably a good 8-9% that we're getting up to. That's going to make us kind of a little fearful about staying in that play. So now you can see by the actual play indicator here that that we're taking puts, and when we did, price went back up, and I mean it tapped that and it dropped. I think the most we saw down was 4%, if that. 5%. It wasn't much of anything because we got filled right around here at this line. Price pushed up and then it instantly dropped. And then we got our 20% right here. So we sold one contract. And as we build up, right now we're 3-to-1 trader is what we're doing. And that should make us profitable. And the moment we hit 20%, we bring it to break even. That's why you don't see a pink area right here. That's why you don't see a pink sell stop loss area. But really, it's up at the top of this candle is what it was. So, but we don't follow that. We follow 10%. We get into a play. If we're 10% down, we get out. If we get up to our 20%, we sell one. We push past that, we're gonna sell at 40%. And we're just stair stepping. So as we build the account up, we're gonna get to 7, 10 contracts. When we get to that level, we're selling 2 at 20%. Then we're gonna sell a good chunk of 4 or 5 of them at the 40%. And then we can hold runners. And if they pull back to 40% and they wanna try and push back up, when they start to tap 30, we're getting out. We're not letting it go past 20% here again. So that's our stair stepping mentality of getting out of plays. And that's just gonna maximize more. But as long as we stay at 3-to-1, then we're good. So we'll maximize those because we'll be able to play it and watch it and see what it does. So with that being said, it's really all about once we hit 20%, we move to break even, and that thing does not go back down below 0. And so you can see here, we hit 20% and we went right back up there, and we had to hit 1.8% down, I think is what I saw. And we held it there with it on the sell, not just review, but on sell, getting ready to hit it. And this one closed here and this one opened and it instantly dumped. And it was just perfect. Once we saw that, it made it to where it was just, we're going to probably get to 40%, especially when it closed below this. And now it was just more confluence to hold. But once again, we've seen these plays do this where it drops and then it's supposed to go all the way down and then it runs right back up. So you have to be ready for those. You have to be ready to sell those. And that's what we've been learning. This right here, the moving to break even and getting out of the play if it goes all the way back too much, this has been the bread and butter. This is what we've been working on, and it's been helping us out a lot in conjunction with the sizing down on the second play, no matter what, if it's a win or a loss, cutting that risk in half. And that's because if I hold those for runners, I hold those for 40%. So right now with building an account though, where we will build up our win ratio, but more importantly, we're gonna build up our capital because like right now, I wanna say we're probably like 30-40% on those second plays of winning them if we really go into it. So like let's look at the profit calendar here. This is what we do of just marking it, of just following our rules. So of hitting them and getting our second play to actually hit it, especially after the first one, we haven't done that. I don't think we've done that all week long where we've hit two of them. The first one is a win, and then the second one is a full 40% win. We haven't done that in a while. Not that it's impossible, but let's build the account up before we start to broaden it and open up for those. You know what I mean? And in the long term, what that's going to do is allow us to get to a point to where we're seeing a lot more plays under our belt, and it's just going to make it that much stronger. So I'm gonna add that back there. That was the play. We hit 40%, we were out. So now market comes back up again. And now to me, after we didn't close all the way down here and we set, this is basing. And this is what we're looking for here. This is what we're looking at here, seeing all of this structure. And now to me, we're holding. We broke back above this. Now we wanna see if we can make some calls here, if we can take some calls. It's all the way over here. And now the reason why is because we took this call right here. Now I want you to see that the first rule is a 5-minute candle close above our area. And our areas are overnight highs, overnight lows, orb high, orb low, previous day high, previous day low, right? None of that has been interacted with right here, as you can see. So we 5-minute candle close above this right here. And now we couldn't get over this higher high that was established. So we set a higher low. And as we did, we're trying to push back through this area. And this is where I decided to take a play for a call. And now the only reason just looking at this chart right here is because I think that we're going up to go and test that overnight high. And I'm an emphasis on the think, because nothing is showing me there that we've done that. And what I need to do and what I know to do is that 5-minute candle close. I want to see that 5-minute candle close above that area. Now, watch this. I bet you right here, we don't get a 5-minute candle close, right? And then now it wants to run up, and now we get a 5-minute candle close above. And now we wanted to retest the area, and look what it does. It retests it, and now it falls below it. But it comes back up and it mounts it still. A little bit under it, but that's still a mount. You know, it didn't close all the way down here. And now look what it did. The moment it's pushed above this, we saw that candle. This is what we could have pushed on. And look at what it did right here. That right there alone would have gave me my 40%, 100%, easily, because that's what it did. It followed the rule. So this candle, and what I've seen before, I've traded this before, I've done this move plenty of times, and I just wasn't patient enough for it. Back here, this right here was being impatient. This right here is what bleeds accounts. That was an unnecessary loss of my capital today. So me being up 30% on something, like I think I was up 9% for the day on the account, on the whole account, I gave back this 10% right here. I got out at 10%, but that's 10% that I gave down, and I shouldn't have done that. So I could have avoided that. As soon as I got into it, I was like, "Ow, you can't celebrate this one." And so I just wanted to point out that 5-minute candle close right here. And this is the part of the video I want you to watch and remember. 5-minute candle close, we went up, then we came back and we tested it. It works. It's not every single time, but you saw how it's just basing here. The buyers are telling you it's holding it, it's supporting it. We pushed down, this pushed down, and it got bought back up. That's what all of that volume is trying to tell me, is that someone bought in and was holding that. Now, we don't just buy this because it's pushing past this candle right here. We let it push past and we let it hold. We let it establish us a range, and now we know if we break this right here ideally is where we get out at. So as soon as this closes, boom, any bit of pushback we hold, as soon as it wants to flip past it, we're buying in. And that's what it did. Boom. We could have bought in right there. And as soon as we bought in, it would have pushed up all within that 1 minute. Let's see how many people that was. That was 227,000 people. All these are all 40s and 50s and 60s. So we would have easily been able to get out of our play. We would have just had to set it real quick. Probably, honestly, would have been up 40% from the rip, and we could have sold them all for 40. And ideally, for a second play, that's what we do. We don't sell them at 20%. We hold it for the 40. Once we hit 20, we hit break even. So that would have been money. We would have been out of that with the quickness, not trying to hold, not trying to, take runners and stuff like that. But this play, let's just read this journal here that we have. This is for this play right here. Absolutely should not have taken that. That's what it says. It's not my area. It was not my area. That was being money focused and greedy. It did not touch overnight high, and I shouldn't have waited for it to fall, is what I should have done. I should have waited for it to show me more. Now I feel frustrated because I waited all day. I was patient all day, and I crushed that first play. And that urge to take a third play rose after this one. Like, I felt myself say, ooh, it actually looks like it wants to go up right here now or down here. Let me take this play. And then I had to stop it. I shut it down and said, no, follow my rules. I'm absolutely not doing that. I haven't broke that in a while. I don't plan on going back down that road, because that is what bled that account out. So I have to stay focused on trading in our area. See how well it worked for us in that first play. And then you just saw what I just pointed out to you. This was just a feeling of needing to make a bunch of money on the fast side creeping in. I let that thought of, well, I'm doing good. Let me try to take this extra one here. And I need to say those out loud. Like, my name is Alan. I'm about to do some stupid shit right here. Like, break that cycle. And that's what I need to do. And I need to set those things to remind myself. So like tomorrow, before I go trade in the morning, I'm a set up for pre-market, and then I'm watching this video right here, because I want to be able to go in and remind myself of these things in real time. So I let it go, refocus. We're here to follow our rules, and that will make us money. We have rushed it before, and that didn't work for us. You know what I'm saying? So with that being said, slow down, killing it. You're doing a great job. Keep going. I'm super proud of you, man. I love you. We're going to look back at this and just feel, amazed. So with that being said, I'll catch you tomorrow.